Welcome to Forbes Newsroom. Joining me now is Janet Novack, Forbes Washington Bureau Chief and Assistant Managing Editor. Janet, thank you so much for joining me.
Pleasure.
So, as we know, the House Ways and Means Committee released a report on former President Donald Trump's tax returns. To you, what stood out?
Well, if you've been following the Trump story and all that's been written, the numbers, shocking as they are, didn't really stand out because we knew from reporting in the New York Times and elsewhere that Trump paid very little taxes and in most years didn't pay any because he had all these losses he carried forward. So the fact that he paid 750 in 2016 and 2017 didn't really shock me. He paid almost $1 million in 2018, nothing in 2020, a little bit in 2019. What surprised me was the dysfunction within the IRS and how lax its approach was to its own internally stated policy of auditing all presidents and vice presidents. So going all the way back to Nixon, there are two traditions we have in this country. One is that all the presidential candidates and presidents up until Trump disclosed at least some tax information. Some just put it all out there.
Why do they do that? Why?
Because during Watergate and during Nixon's problems, it became clear that there might be some problems with his taxes. And he said, I'm not a crook, and I want the Joint Tax Committee to look at my taxes. And he ended up paying, about $400,000. But the point is that nobody wanted to be like Nixon. So everybody was disclosing their taxes. In fact, Jeb Bush, who was defeated by Donald Trump in the 2016 primaries, he put 35 years of tax returns out there for the public to see. So that's one tradition that Trump was, ignoring. The other tradition, which was memorialized in the 1970s in the IRS manual, which is like their Bible, was that they were to audit every president and vice president. But we had no real evidence on what they were doing. We assumed they were doing these audits. So what shocked me the most in this report was the long delay in the audit of Trump. Depending on which documents you believe, they may not even have started auditing him until the Democratic-controlled House Ways and Means Committee in 2019 asked for his returns and for evidence and documents relating to the audits. That's number one. But number two was the sort of low level at which they pursued this audit. They had one auditor on it for a while. And when they wanted to go up to 3, Trump's lawyers complained that, well, you're tripling the manpower and that's not fair. And at various times, they didn't do things like even ask for substantiation on these huge deductions. And that just struck me as very odd. But the explanation the auditor put in the file was, well, he had real tax accountants and lawyers preparing his returns. So, we don't need to check that. Well, there are two problems with that. Number one, if you as an ordinary taxpayer get sent what's called a correspondence audit from the IRS and they say, we think you fudged your charitable deductions or please substantiate them, you have to send the documents back. They want to see them. The second part is that anyone who has been following taxes in this country for as many decades as I have knows that some of the most questionable, to the line and over the line tax strategies over the past 30 years have been promoted by otherwise or previously considered reputable accountants and lawyers. So the notion that he's got big name accountants or lawyers and therefore we don't really need to see this is just shocking. Now, the IRS had huge problems with resources in this period. So during this period, for example, the percentage of people who earn over 10 million getting audited fell from 20% to something around 4%. So there's no doubt they had resource constraints. But this is something that in their manual they said they were going to do, audit the president. And his returns required more than just one guy sitting there saying, well, I trust the accountants. So if you ask me what shocks me, it's not that Trump paid very little taxes and that he had all these losses. It's that the IRS, which we all knew was dysfunctional and in a funk, was this poorly resourced and had this little gumption. And I cannot honestly tell you whether we're looking at interference politically or incompetence. I always tend to go with the simplest explanation of incompetence. But so that's what shocks me.
You're really painting this picture here of the IRS that's really poorly run. So why was this audit not rigorous? Do you think incompetence is to blame, or is this the fault of former President Trump?
We don't know. To give you a little context that actually involves Forbes, while Trump was running for office, Charles Rettig, who was a contributor to Forbes, wrote a column on Forbes that said, if I were his lawyer, I would tell him not to disclose his returns because he, being rich and having all these, entities, is probably undergoing one of these horribly invasive high wealth audits with all these experts auditing him. And lo and behold, he got appointed IRS commissioner. Now, you could say, well, what about that really intensive audit you thought he was supposed to be undergoing? Why didn't that happen, Mr. Rettig? Ironically, towards the end of his term, which just ended recently, under the Biden administration, he has been adamant that the IRS needed all this money the Democrats gave them last year, and that the IRS is totally outgunned. And I believe him that the IRS, when it comes to auditing rich people, is totally outgunned and outmanned. But the question is here, did they decide they weren't even going to use those guns they had because he was the president? We don't know. And we also don't know, there was this delay of turning over the returns, which is really quite important to understand here, because there is a part of the law that says that the IRS is supposed to turn over returns if the Joint Tax Committee and the Ways and Means has a legitimate reason to look at them for legislative purposes. And they sent the request to Rettig. He sent it to his boss at Treasury. Treasury said, we're not giving you the returns. And it then took 3 years of court battles, which is why we're only, the committee only after the Supreme Court finally turned down the last appeal, got these returns, 6 years of Trump's returns. They got them last month. Now, you could argue it's invasive of them. They are going to release his returns. They haven't done it yet. What they've released so far is a report on how they think that these audits need to be reformed so that they become more rigorous and automatic, and a summary of what was found in the tax returns and the audits of the returns. And the Joint Tax Committee said, look, none of these audits are closed yet. We can't say if the IRS had looked at all these items we think they should have looked at, whether Trump would owe more taxes. We can't tell you that. We're just telling you that they didn't look at these items. Things like huge, questionable charitable deductions for land donations. Now, what happened was eventually the IRS started looking at more items. First, they were embarrassed, I think, by the New York Times report in September 2020. And New York Times had gotten 15 years of his returns, or 17 years. And they had a big meeting and they said, maybe we should look at this issue. Maybe not. We should look at this issue. Literally using a New York Times report, which granted won a Pulitzer, but these are reporters to decide what to look into. And then they really did ramp up, it looks like, some of the investigation after President Trump lost re-election. I mean, I can't tell you if that was the reason or whether the New York Times was the reason, but certainly the delay in auditing him, the delay in turning over the returns, and then the lame approach they took to the audits to begin with has got to raise some eyebrows.
Who do you think that this report looks worse for, the IRS or former President Trump?
Well, from the point of view of what new we learned, the IRS. We know that President Trump did not like paying taxes, that he was very aggressive in his tax practices. And as he pointed out, that makes him look smart. And some of his followers probably believe that. But now we are seeing the IRS either even more dysfunctional than we realized or just cowed, which is possible. But it certainly suggests that what we assume was going on in the way of presidential audits all these years has not been going on. And that the tradition of releasing returns, and Mitt Romney released a huge, long return when he ran. That tradition is a very good one because it lets us all look at the returns in real time. And therefore, issues are flagged and the IRS presumably would take on issues if they existed, just like the IRS seems to have responded to the New York Times reporting. So it doesn't look good for the IRS, and it's just a very sad chapter in their history.
You said President Trump doesn't like paying taxes, and he's had these aggressive tactics when doing so. Is this illegal?
Well, I'm going to have to leave that to the lawyers. I mean, there's obviously, there's civil penalties you could face for taking various aggressive positions. We don't know. What we do know is that many, many years of Trump's tax returns the audits are not closed. And that none of these 6 years are closed. So when does aggressive go over the line to abusive and then to illegal? You'd have to be a tax lawyer to decide. And then, of course, there are various prosecutors looking at issues related to his taxes in New York. So we just don't know. We know he's aggressive. We know that some of the charitable claims he made and deductions he took were very questionable. We know that there are issues about the way he is passing wealth and maybe paying his children. There are all sorts of issues there. But, there's a big, wide world that goes from Joe taxpayer, has a salary, pays everything he owes, doesn't itemize. His only tax shelter is his 401k, to your normal, multimillionaire, billionaire who likes to play it safe and takes everything he thinks he really legitimately can, to perhaps the world of businessmen like Donald Trump, who are as aggressive in their tax filing as they are, and maybe as creative in their tax filing as they are in other parts of their financial dealings.
Knowing what we know now, as you described it, creative in his tax filings, was it smart for him to keep these tax returns private for so long?
Well, as he said, he got elected in 2016. Would it have affected the elections if his tax returns had been out there? I'm not the political savant. I can't tell you that. Maybe it was smart to keep them private.
And aside from being a sad chapter, as you described, for the IRS, what else does this report indicate about the IRS?
Well, it's just an example of how under-resourced it's become and how outgunned it is when it is auditing either big corporations or the very wealthiest individuals. At one point, there's a note that among Trump's representatives who had come to a meeting um, was a former general counsel of the IRS, right? So they are outgunned, and it will be very interesting to see whether they can keep the money that they were given under the Democrats' Inflation Reduction Act to beef up enforcement. And that money is only supposed to go into service and then enforcement and auditing of wealthier people, we'll say. And it will be interesting to see whether they have, let's say, an attitude change towards auditing presidents. But again, taxes are secret. In fact, that too dates back to Nixon. There's a part of the tax code, there was some evidence that Nixon was using the IRS to go after his enemies. So there's a part of the tax code that actually protects people's privacy on tax returns. It's called 6103. And part of the exception to 6103 is that that the Congress's tax writing committees can get access to individual returns, right, to study tax issues. And they can even release those returns if they believe it's necessary, which is what they did here, right? So we don't actually know, and we won't know in the future, whether the IRS has really started aggressively auditing presidents unless they pass a new law that makes it routine for the IRS to be compelled to audit the president. And that's what the Democrats now want to do, and to perhaps turn over results of those audits to Congress, which then presumably would still be required to keep them secret, except in rare cases. So this is all very complicated. But I got to tell you, it doesn't encourage tax compliance when you see these guys who make so much money, and they not only are aggressive, but the IRS is scared of them, because the average taxpayer is scared of the IRS. And they, sometimes, in fact, they pay money they don't owe because the IRS sends them erroneous requests and says, the IRS is wrong. They're not, but they're scared of the IRS. So they send the IRS that extra $1,000. And, when you compare that ordinary law-abiding fear of the IRS with what the very rich and the aggressive rich taxpayer get away with, that doesn't help confidence in our tax system.
Is this going to change the perception of the IRS, do you think?
Well, I don't think so, because I don't think it's going to stop the Republicans for wanting to defund the IRS. In fact, that's what they did during the Trump years. And I think people who are familiar with the IRS will be a little shocked. Let's put it that way. And the general public, I don't know. You'd have to do a survey of whether people, generally the American public, when you survey people, thinks that rich people don't pay enough taxes. That is one thing that comes through. And what we don't, and a lot of that has to do with the tax law. Trump used to say, in many cases, quite correctly, I can do what I can do because Hillary's friends put it into law, right? And there are a lot of things, such as tax breaks for real estate, which were not touched, which were kept in the Trump tax cuts of 2017. Real estate made out like a bandit, wonder why. But so there are a lot of things that he can legitimately use, given the business he was in, to cut his tax burden below your burden or mine as a percentage of income. But I do think that he was fairly aggressive, and that the IRS's inability to deal with this is a problem for most people's view of the IRS.
Janet, we definitely have a lot to keep our eye on. Thank you so much for joining me.